Welcome back to the Digital Asset Report. It's been another wild week here in the markets, and we're here to keep you up to date. Let's start with Bitcoin, which has staged a significant recovery over the past couple of weeks. After bottoming out around $74,000 in early April, Bitcoin has now climbed to roughly $94,000, marking a 26% increase from recent lows. This rebound has been driven by a mix of macroeconomic and political developments. Gold hit a record $3,500, signaling a broader flight to hard assets, and equities rallied following President Trump backing away from his previous suggestion that he might fire Federal Reserve Chair Jerome Powell. That move added a layer of stability to the markets, and Bitcoin, as it usually does, responded quickly. With global uncertainty still lingering and U.S. trade policies in flux, Bitcoin is once again proving to be the go-to asset for those looking to hedge. On the political front, President Trump continues to have an outsized influence on crypto markets, not just through policy, but through active participation. The Trump meme coin launched just before his inauguration saw a major surge this week, over 100%, after it was announced that Trump will attend a private dinner for the top 220 holders of the token. The top 25 holders will even get a VIP tour of the White House. According to the project's website, this is not a fundraising event, and Trump is attending strictly as a guest. This is a highly unusual but attention-grabbing development that reflects how meme coins are continuing to blur the lines between culture, politics, and finance. Now, shifting gears to one of the biggest institutional moves we've seen this year so far, the formation of 21 Capital. This newly launched Bitcoin native company was created via an SPAC merger with Cantor Equity Partners. The company is backed by Tether and SoftBank and will be led by Jack Mallers, who many will recognize as the founder and CEO of Strike. 21 is launching with over 42,000 BTC in its treasury, which will position it as the third largest corporate holder of Bitcoin globally. Their strategy is very clear: increase Bitcoin ownership per share and take a fully Bitcoin-denominated approach to performance. They're introducing new metrics like Bitcoin per share and Bitcoin return rate to shift the focus from fiat to Bitcoin native growth. The company will also explore future expansion into Bitcoin-based financial products and media. It's an ambitious plan and a notable moment for Bitcoin-focused public market strategies. On the Solana side, there's another major capital move taking shape. Soul Strategies, a Toronto-based digital asset firm, announced it has secured up to $500 million through a convertible note facility to expand its Solana validator operations and increase Soul token holdings. This follows a broader trend of public firms adopting the strategy Bitcoin treasury model, but applying it to alternative layer ones like Solana. As of last month, Soul Strategies held over 3.3 million Soul, worth more than $500 million, and has steadily been acquiring validator businesses to strengthen its network presence. Interest on convertible notes will actually be paid in Soul, and the financing is structured to be directly tied to staking yields. This is the first facility of its kind within the Solana ecosystem, and it signals growing institutional interest in yield-generating proof-of-stake treasury strategies. Institutional sentiment around Bitcoin is also turning sharply positive again. Just this week, we saw $912 million in ETF inflows in a single day, the second largest daily total on record. It's a strong signal that investors are re-entering the space in a meaningful way and looking to build positions as confidence in Bitcoin as a long-term store of value grows. And finally, a major regulatory shift to note. Paul Atkins has officially been sworn in as chairman of the SEC and told the press on Tuesday that his top priority is to provide a firm regulatory foundation for digital assets. A former SEC commissioner from 2002 to 2008, Atkins is widely viewed as a business-friendly figure with a deregulatory tilt. His appointment is likely to have a ripple effect across the crypto industry, especially as conversations around ETF approvals, custody frameworks, and market structure continue to evolve under a more market-oriented SEC leadership. That's all for today. If you enjoyed this video, be sure to give us a like and a follow, and head over to bitgo.com to learn more.